business community in its many forms being engaged in the provision of solutions, it's unreasonable to expect our public institutions to save us from ourselves. I happen to like the company of entrepreneurs. I found after 20 odd years of working on climate change, it can be a bit depressing. Entrepreneurs are essentially optimistic people. They feel that it's possible to do whatever it is that their enterprise does. And I think it's worth just dwelling for a moment on the diversity in the ecosystem of business. Much of the discourse about business, particularly in the world of public policy, is focused, I would say even obsessed, with big business, with very large brand names. Much of the conversation in the multilateral negotiations I did for so many years portrays business as big units of economic power. And of course, we all know that exists. That's true in many parts of the world. But all of our economies, all over the world, are built on small business, on enterprises much smaller scale. And those enterprises, of course, use profits in order to continue to operate, but many of them are not principally motivated by profit making. They exist to do what they do. If I'm a baker, I might choose to be a baker out of vocational desire to bake bread. If I don't make money from baking bread, I won't be a baker for very long, but my principal motivation is not to make money from baking bread. That's part of the business of baking bread. And also, just to put this crudely, many small businesses don't like to make lots of profits because they actually don't want to pay that much tax to the government. They prefer to carry on doing what they're doing. So we exaggerate the dominance of profit making in business when we discuss the role of business in providing a highly complex and dispersed problems of which climate change is the ultimate example. And if we're going to engage an entrepreneurial spirit in response to climate change, we have to understand the variety and range of skills and expertise that we have inside business that does not look like the usual representative in a suit before a government negotiation process. Now, having said that the ecosystem of business requires large players. And one of the things that we lack in the transformative businesses, particularly in renewable energy, clean energy, is we lack big, pure play players, concentrated, dedicated companies that can attract capital at scale. So I'm going to return to this theme in due course of what needs to be done, where decisions could be taken that make a profound difference to climate change, but perhaps don't carry a climate change label. That's why I'm so interested in this theme. Where do we take decisions that have a tremendous effect, but actually don't need to begin inside the normal climate change conversations? So one of the other aspects of my work is to try and understand the mind of investors. I've learned over the last 10 years that the dominant motivation behind investors, particularly big institutional investors, is to not lose money. It's defensive. It's essentially pessimistic. And it's risk averse. It's also true that over the last few years, particularly because of the financial crisis, but also because of aging populations, most of the big sources of capital in the world have a very serious long-term liability problem, which means that the money that they're supposed to be preserving and investing in order to produce returns to their beneficiaries does not seem to be anywhere near enough to allow those people who have got pension funds to retire
at the age that they thought they were going to and live at all comfortably. So right in the middle of the investment universe, there is a serious dilemma where, regardless of climate change, it feels as if the liabilities are growing and the assets are not strong enough and not producing good enough returns to meet those long-term liabilities. Now, when you look at that through the lens of climate change, you see a different set of assets and liabilities. Most investors want to make their returns because they've found something that's undervalued that increases in value. And what they fear the most is something that they've acquired for one value that declines in value, particularly if it declines rapidly and they can't exit their position. So we're now entering in a world where we've got overlapping debt. We have ecological debt, we have societal debt, and we have our major asset owners deeply concerned that they will not be able to pay on their long-term liabilities to their beneficiaries. Now, this creates a feeling of great unease, which can be problematic, but it can also create opportunity to make a significant shift. Let me give an example. Most asset owners are very worried about how their portfolios are allocated. They're making very poor returns from bonds at the moment. They don't like the volatility in the stock markets, and they haven't shifted their allocations towards real assets in large enough numbers. So you can see a theme emerging where institutional investors choose, again, regardless of climate change, to focus more of their money on productive, real assets. Now, if you were to draw up a list of the things that need to be done to properly respond to climate change, many of them will go into that box. We are looking to make productive, real assets in agriculture, in infrastructure, in buildings where so much energy is consumed, where we know we have all the technologies or all the skills available to dramatically reduce energy consumption and indeed water consumption in buildings. Most parts of the world you could get to 30, 40, even 50% of the CO2 problem just by focusing on buildings. Well, suddenly your climate change debate, the list of things you want to do, seems to match the things that institutional investors have to do in order to get out of a problem that has been created largely by them, but has nothing to do with climate change. Doesn't need a climate change label. Real productive assets producing yields that can build better capacity to pay beneficiaries over the longer term. So now I'll give you an example out of the energy sector, combining those two propositions, that we don't have big, pure play renewables companies for institutional investors to invest in, but equally, all over the world, investors are looking for yield. This is a catchphrase, I hope it translates all right. They're looking for real assets that produce real returns over a long period of time. About a month ago, an American utility called NRG, which has been quite progressive on the climate and clean energy front, decided to take off their balance sheet their renewable energy assets. Actually, they combined gas and renewables. And they floated that company on the stock exchange in America. And they called it Yield Co. That company has assets that are operating, generating clean energy assets that the market absolutely wanted. And it has gone up, I think, 16%. It went up 5% in one day last week when I was in the States. But interestingly, so did the original company go up in value. So the market looked at NRG and said, this is a more valuable business when the renewable energy, the clean energy assets are taken away from the main business and allowed to go free and concentrate their expertise in this particular subsector of the energy sector. Now, I think this is a tactic that can be used all over the world. My colleagues in London, in Climate Change Capital, have been trying to do this in the UK for years, trying to persuade the companies that have essentially fossil fuel bases to their business, to let the clean energy businesses off their balance sheet, operating businesses, and then raise money on the back of those. It'll make capital cheaper to acquire, but also it'll be a focal point for industrial development. Smaller companies will look towards it, they will sell their technology into it, just as happens in the networks business and the mobile phone business, where small businesses know that at a certain moment they can sell their business or their technology into a larger company. That is the kind of decision making that we need to happen to give us a chance of a big transformation in our energy economy. Let me give you another one. Over the last few years, I mean, ever since really just before Copenhagen, we've had this magic number of $100 billion climate finance. It's a made-up number. I think possibly the Brits might have been responsible for it. I don't know, but forgive me if it's utterly meaningless. Right? There is no. It doesn't. Nowhere can you. Where is this money? Where's it going to go to? Who's going to keep it? Who's going to invest it? It disappears as soon as you talk about it. But on one day, in the bond market, in the capital markets in America, Verizon, an American phone company, raised $130 billion on one day in the market. You just looked at those figures about the costs, those annual costs. Nothing, right? Not much. $130 billion on a single day in the bond and the capital markets. Now, what's Verizon? Verizon is one company with one brand and a customer base. It doesn't even have much intellectual property. It has no physical, well, has some, but very little physical assets. It needs to work with the national grid or with other people. In order to be a business, it needs a lot of other businesses. But they were able to raise money on 30-year issuance at between 5 and 6%. Some pension funds and sovereign wealth funds took, one sovereign wealth fund took $15 billion over 30 years for a single company. So let's not imagine that there's no money in the world to solve this problem. But that money is private capital looking for yield. And they think they can get it from Verizon's customer base. And they believe in that technological future. Now, whether or not that's a good or a bad investment, we will see. But it's an indicator of where the money is. Because if you look where the strongest balance sheets in the capital markets today, who's got the money? Facebook's got the money. Google's got the money. The telecoms company's got the money. What sort of businesses are they? They're systems businesses. They do hardware and software combinations. They're brain power based. Why shouldn't one of them decide that they can do energy? Why couldn't they do solar power? Why do they need to dig stuff out of the ground and burn it in order to create energy? So I think it's quite possible that we'll get a transformation from unlikely places. I'll give you another example, another unlikely place. Kenya just had an appalling tragedy, terrorist action, which I think in the end might galvanize the society more. Kenya is a fantastically creative place. The app developing community, the software building and designer community in Nairobi is world class. From a Nairobi base, two new companies, I think, give you an example of what could be. M-Pesa and M-Kopa. M-Pesa is a mobile phone payment system. 80% of Kenyans have a mobile phone, 20% have access to the grid. The mobile phone is leading development in Kenya, and it's leading energy development. M-Kopa combines the mobile phone with a payment system and solar PV, solar photovoltaics. So someone in rural Kenya can get power, charge their phone, and connect to the world without someone building a grid out to them, without the power politics of building a grid out to them. So I think we should expect the transformation to come from unlikely places, both unlikely companies, unlikely jurisdictions. The transformation will have costs. There will be losers. It's not a free ride. Someone earlier said, you know, all transitions cost money, but in the cost is the investment in the future. So one of the things that we do routinely is we compare the costs of renewable energy versus fossil fuel generation. But we do that as if the present is forever the future. In fact, once you've built the capital cost to build a new system of renewable energy, you're going to have extremely low operating costs into the future. So you can't compare a renewable energy power generation with fossil fuel or indeed, you know, other forms that produce lots of waste, because in the end you'll either have light from the sun or wind to power your systems, and there's no supply chain and no cost associated with absorbing that energy. So my sense is, if you just to conclude this, so we can have questions afterwards. We have a very diverse ecosystem. We have the potential to create new business models, not the same as the past. We have tremendous technological innovation, but we don't yet have scale in the alternatives. We have institutional investors with a problem of their own making that's nothing to do with climate change. They're looking for yield, they're looking for returns that last a long time, and we can build infrastructure, innovation, and information systems to take lots of capital from those places to increase the chances that we can make our transformation at the right speed to de-risk our future. Because if we do all of these things simultaneously, and we can, it's much more likely that we will reduce the threat of serious or irreversible climate change, which in turn will give us confidence to go further. One of those reactions I know you all experience in your life when you talk about climate change is that it's quite frequent that people feel as if there is nothing they can do. It's just too big and too difficult. But I sense with this combination of improving the knowledge base, improving the insight from that knowledge, and then finding ways of clustering innovation. So you put policy, finance, and technology together. You think which technologies give us the chance of making a big shift. I'll give you one more example before I finish. You know particularly from the industrial development of the 19th century, that it's very rarely one technology that transforms an economy. It's usually two or three that combine. And then that's not enough. You need to have a public policy change, an incentive that comes from the political system, and you need access to capital, all those things. So when James Watt invented the steam engine, he needed a Mr. Bolton to provide the money, and he needed a change in the intellectual property laws in the UK for the steam engine to take off. Well, that wasn't enough either. You needed steam, you needed coal, you needed water, you needed them all together. What's our combination? What could it be? It could be renewable energy, storage, and smart grids, intelligent grids. It could be that actually we're led by broadband and the rollout of broadband. If you're making a decision tomorrow about distributing broadband technology to your country, you don't have to call that a climate change investment, but if you do it, you could combine it with a smart grid, which in turn will make it more easy for renewable energy to flourish, which in turn will give consumers more control over their energy demand, and so you could have supply and demand in real time managed by every individual, but also the goods that they buy, their washing machine, their fridge, their TV, they can all include chips that will communicate all the way down the line. So what starts out as a broadband investment, nothing to do with climate change, turns out to be a fantastic investment for climate change. The same with advanced materials in manufacturing. The invention of graphene in the UK is a source of great pride. Russian professor at a Manchester University. Interestingly enough, there are more patents now being taken out on the use of graphene in China than in the UK. But alternative materials to steel produce huge benefits for the manufacturing of cars, planes, trains. That doesn't need an environment label or a climate change label. But the invention, the science and technology, combined with, say, a public policy incentive like a price for carbon or a reward for energy efficiency in vehicles, when you put them together, you have a technological breakthrough with a public policy message and significant markets. So this is my parting shot to you. If you take Carlos Nobre's presentation this morning with the scale of the scientific numbers and you add it to the other presentations since, it's possible to approach this without being daunted, scared of the potential. Because there is tremendous capacity to innovate in technology, in public policy, in how we organize ourselves. And I think it's right, given this particular audience, to feel confident about the capacity to deal with this issue, no matter how big it is and how oppressive it feels. And it will include these elements of knowledge, insight, and action in a dedicated and energetic way inside the business world. Thank you.